Hello, and welcome to the Wade Borth podcast. I'm your host, Wade Borth, and in every episode, my goal is to get you to think differently about how money works and ultimately to empower you to take control of your money and your personal financing system. Hello, welcome back to the Wade Borth podcast. Today, we're bringing back Nicole Tate. She's been a special guest on this podcast before. We went actually through a whole series of Nelson Nash's book, Becoming Your Own Banker. And it's just a great opportunity to bring her back in. And we had some discussion earlier today about the family banking process and how powerful that is. And so I thought what I would do today is bring that conversation back to the listeners, for those people that are listening to this podcast, regular listeners, because this is something I really don't believe you can hear enough to understand and appreciate what's going on. So Nicole, welcome, and thank you for taking time to go through this with me again.
Yeah, thank you for having me. I'm really looking forward to it.
Yeah, it's kind of a foundation to what we talk about. So I think it's really important that we have multiple conversations around this, because this is the key to what we talk about. This is the idea of being in control, having access to money during times of chaos and opportunity. And the difference between chaos and opportunity is who's got cash and who can use it and put it to work. Would you agree?
Absolutely.
Yeah. So what we're going to talk about real quick is today is just this idea of when we want to put to work, how we put it to work, and really what the benefits are. Not so much the mechanics of it, because there's some small mechanics of it, but quite frankly, this is some of the easiest stuff in the world to learn. But the problem is with most of us in our human brains, we just want to make things difficult. So I'm just going to review with the listeners and those that are watching how this works. If you can imagine, we got three boxes. One's on the far left is our policy. In the middle is the insurance company that we use for administration of our policies and access to cash. And then we have what I call the family banking part of this. And so what happens is opportunities are going to come our way all the time. Nelson's book, he wrote that opportunities aren't just going to find you. They're going to knock the door down trying to get to you when they know that you have cash. So in the investment side on the far right, there is all kinds of opportunities. And that opportunity might be a piece of real estate. And a great example of this was, and I don't know, Cole, you probably have examples of this too, but I can tell you from my standpoint, back in 2008, I had clients that were wanting to buy real estate down in Vegas and houses for their own purpose, their own use. And they were going to pay this absorbent price. 2008 came, the prices, they fell tremendously, and they ended up buying this house at 40 to 50 cents on the dollar, what they could have bought 6 months ago, before that, or a year before that. Nobody was giving out a loan then. I mean, all the banks were tight with their money, but they had enough money in their policies that they could take advantage of this real estate that they want to do. So that's just one example. Another one might be some hard money lending that you want to do. Whatever it is that you want to do to grow your value and your worth and your wealth, it usually takes money. And the question is, who controls that? Who controls those dollars? And so if I look at the family banking process, this goes, I'm like, I'm going to take my dollars that I'm stored up, that I have, and I'm going to buy this piece of real estate. The point is, where am I getting my money? And so the family banking concept says, I don't use my own money, because my money right now is inside my policy, but I use it for leverage, in the sense that I'm going to call, let's say I need $100,000. And let's say I have, in my policy, I have $700,000 in my policy. Now, this doesn't happen overnight. It takes a system of policies typically, but it is time and consistency of putting and saving between 10 and 30% of your dollars into the right environment. So we have money in our policy, but we don't necessarily want to pull it out. We want to have that compound the rest of our lives. So we go to the insurance company and we say, hey, we need $100,000. So they look at my policy and they go, yep, you got $100,000. They're going to put a lien against it, not pull it out, but put a lien against it, but take the money from their general fund of the insurance company's general fund, and they're going to lend me or the Borth Family Bank $100,000. Then I'm going to take that $100,000. I'm going to buy this piece of real estate with a plan to pay it back with principal and interest at a much higher rate than what I'm borrowing from the insurance company. Therefore, this is the banking concept altogether. Did I miss anything, Nicole? I know I went through that fairly quick.
Nope, I think that's pretty straightforward.
So the idea is, if I'm borrowing at 5% interest rate, I'm going to make sure my real estate's paying back at 10, because if I was out on the street right now trying to go to Wells Fargo to get a loan, what could I get it at? You just recently built a house, Nicole.
Yeah.
A non-traditional house, right?
Yeah.
Non-traditional construction, not non-traditional house. Non-traditional construction, right? What kind of interest did you have to pony up in order to either finance the construction of it or for a long-term mortgage? Are you in the
Um,
6-7% range,
eight and
8%?
a half.
8.5.
Yeah.
So if you're willing to pay Wells Fargo 8.5%, why wouldn't you be willing to pay yourself, your family bank, at least 8.5, maybe even a little bit more,
Yeah.
right? So,
Yeah. And I
so
think
this
when
is
you understand that that money goes right back into the policy, it makes sense.
right. Well, quite frankly, it doesn't go right back in the policy, right? Because we have to. There's a difference here between what we're paying the insurance company to use their money and what we're using or what we're getting from whatever investment we're doing, and those extra dollars then have to be redirected, and we do that in the form of paid up additions. So that's why we have to have policies or a system of policies that can accept those extra dollars.
Right.
So with that being said, that's how the family banking system works, right? So you want to pay it back at a higher rate. You want, because this is your dollars, you could be investing other places. So when you put it to work, maybe you're buying a piece of, again, your home is a little bit different story than buying a piece of real estate investment. Or if you're doing hard money, you definitely want a better rate of return than what you're going to get on your house. But the point is that we're returning those dollars into the family bank, and the family bank says, now what do I do with those dollars? I just need to go warehouse them somewhere. And our policy is just that. It's a place for us to warehouse it.
Right.
And obviously we'll pay the loan back with, the 5% interest plus, again, and this is the part that you and I really want to have the conversation around. In the sense that, what do we have? What does this look like to you when you take a look at the chart that I drew out here? What does this look like to you?
It looks like you're just moving money from one entity to another, but it's staying within a closed circuit.
Yeah. So you have a closed system, right? You have this closed system, and you're recycling money within this closed system, right? That's the
Hmm.
beauty, is that it's able to grow because nobody's siphoning extra dollars off of that, right? That's why I see the real strength is. And the other part is what is like, who controls that system?
Yeah. And I think, Wade, that is where the power of this really is. And it took me a while to grasp that. But this closed system becomes a system that your family can use and can continue to use for as long as the family exists. It doesn't have to end with this one transaction or one person. It just continues to regenerate and regenerate.
Yeah, that's a great word, regenerate. I hadn't really thought of it in that terms. So we're regenerating those dollars. I would say we're not regenerating the dollars. We're regenerating the opportunities, right? And so we're the ones that are in control of the system. And like you said, because we're in control, we can predetermine how big that system gets by how many transactions we do, how many. This is a conversation I've had a lot of times with different clients. Like, people are always looking for, let's find deal flow. Let's find that, where can we take our money, put our money. I don't know what that is for most people. You don't know what that is for most people, because they have to determine that for themselves. That has to be their unique thing, right?
Hmm.
All we're saying is that when you figure out what that is, now control the financing part of it, the banking part of it, and make that system as big as you want. So I got clients that will regenerate these opportunities, because now they're doing 10, 15, 20 deals, where 2 years ago they did two. They were like, oh, I'm going to try this with this. I'm going to try this. And then once they see that it works, they're like, holy smokes, I'm in control of what are the terms of all loans. I'm pretty much in control of all those terms, right?
Yeah. Yeah. And I think too that even if we are not actively looking for deals or actively investing in anything, you're right. There, if you have the money and the opportunity comes, then you have the ability to exercise that opportunity to act on it immediately if you want to. But even outside of that, just the beauty of having a financial system that you own and that nobody else can come in and change the rules or take money out of, there's a tremendous amount of power in that.
Oh, absolutely. The power lies with the people that control the financing.
Yeah.
If anybody that's listened to my podcast has heard me say multiple times that the conversation I was having with the CPA one time, he made this so clear. He says, those that control the financing always win. That was his point.
Yeah.
But to our point, is like, those that control the financing are creating the rules. And
Yeah.
so if we're the ones that are doing it, we're creating the rules. This brings control and certainty to a normally otherwise uncertain landscape, in the sense that, you know, I see this creeping back in, right? We have a 5-year arm or a 3-year arm, right? We're going to do X amount for 3 years. And then after that, who knows where the rates are going to go
Yeah.
for 3 or 5 years. This is bringing a tremendous amount of uncertainty to people when all reality, there's so much uncertainty on the investment side. Then why do you want uncertainty on the capitalization side or on the financing side?
Yeah, that's a good point. Keeping the uncertainty on the investment side, but keeping the certainty on the capitalization side.
Yeah, because you think about it, who's in control of your business, Nicole? If you have to, every time you want something or need something, you have to take it you have to take it to the bank and get approval.
Right.
Now, if you're the one that's controlling it, then you're the one that gets to be approval. So now you have the ability to control it. And you have that certainty of saying, I know what the rate's going to be. I know what the payment's going to be. And I know that if I have to change it in the future for whatever reason, because life happens,
Hmm.
I'm the one that can go ahead and change it.
There's also, as we're looking at this and thinking about, so you use the example of having $700,000 in a policy, and a new person into this world may look at that and say, well, how in the world would I ever get $700,000 into a policy? It's a lot of money. And it goes back to your 3 points of it takes time, money, and discipline. It
Yeah.
takes time. That this isn't something that happens overnight. It could, if you've got hundreds of thousands of dollars sitting around, you could potentially get that into a policy. But more than likely, it's going to take a series of policies and a number of years to build that up. But that doesn't take away from the power of this building, because you've also said, at what point in your life are you not going to need financing for anything anymore?
Yeah. The other part of what you're doing here, and this is the part I don't think we've talked about, I know you and I haven't talked about in the past, is we say that there's a borrower, typically there's a saver, and there's the wealth creator. The part that I think maybe we've missed in the past is a legacy generator.
Yeah.
Think about how powerful this is in the sense of A, it's a legacy generating because we're passing on. This is the Rockefeller thought process, right? We're passing on this closed system that I control now. Hopefully, one day my son will take over that system. His family will take over that system. And now you have a group of people that's my legacy. The legacy that we're creating is that ability of controlling that closed system, like you said. Then comes along when I graduate from this earth, there's going to be a tremendous amount of death benefit. That will be an influx into that system. Now you make the system even bigger and bigger,
Yeah.
but still a closed system. And then Josh, his policies, when he graduates from this earth and he's got kids, it generates that even bigger legacy. And it takes time. It absolutely takes time. So let's put it in terms most people can understand. Are we afraid of premium or do we embrace premium? Most people, I would say, what?
They're afraid of it.
Right. They're afraid of premium because we've been conditioned to think that premiums are bad. Where people that get this and want to truly embrace it will say, I want to pay my premiums. I want to grow my system because they know by paying their premiums, they're growing their system.
Yeah.
That's the beauty of it.
I also think I've thought about this recently, that a lot of people talk about being debt free or being financially free. But I think the more important piece is not necessarily being debt free, and who everybody's definition of financial freedom may be different. But this allows you to be free of the financial system, not necessarily from the financial system, because you're still going to be in the financial system, but it allows you to be free of the financial system that others have created and that others demand that you follow their rules. You get to essentially create your own rules in your own financial system.
Absolutely. And that's a great point. And to that similar point, people talk about what's wealth or what's a wealth strategist? What do we do? Right. That's kind of a great question. And the point I would make to that is you have to have a definition of wealth. And what I see wealth, and it's just my definition, is creating this legacy that to where my son and maybe all his kids never have to walk into a financial institution ever again.
Yeah.
That's wealth. That's true wealth, where we've created a big enough system where they're never going to ever spend every dollar that's within that system
Yeah.
because they understand we haven't just passed along dollars. We've passed along a system, a process, and a mindset and education, which all go into, like you said, now we're free from that part of the financial system that has really been designed to take control of the part that nobody really understands or nobody wants to take control, and that's the banking function. That's the real key, is that somebody's going to do this anyhow. Wells Fargo has their own system, right? It's a very closed system that they control, and we choose to plug into it, but they make the rules.
And back to your original comment that when you have money, people are knocking at the door to get your money. People are they're not knocking at the Wells Fargo door. They're just walking in the door saying, "Hey, can I get money from you?"
That's a great point. There's a tremendous amount of truth right to that statement. They have access to money, and people aren't just they're literally knocking down the doors. They swing the doors open all day long. So the question is, do you want to be part of that? Do you want to create your own closed system where you control, where you are the one that's in charge, or do you want to just plug into somebody else's system? That's really the two choices you have. There's two types of people: those that want to create their own and run their own, or those that want to plug into somebody else's system. The problem is when you plug into somebody else's system, you play by their rules and you pay their price.
And I guess in exchange for paying their price, you can have access to their system potentially immediately, assuming that you meet all their criteria. Whereas with your own system, you have to take the time and the discipline to build the system. But if you have a long term mindset and a vision for the long term, why wouldn't you want to create that?
Why would you want to create that? That's a great question. That's going to be the question of the day. Why wouldn't you want to create the system that you own and control?
Yeah. And I
Because
guess
you're
for that,
right.
it may make sense. It does make sense for people when they're starting the system out that, of course, they're likely to still need to go to the traditional financing systems to do things like buying houses or maybe buying cars or whatever. But if you're looking at this from the long term and you say, okay, 5 years down the road or 10 years down the road, I'll have this system created. And now I can begin to wean myself off of the traditional financial system.
So it goes back to the fact that it takes time, it takes money. Again, if you're going to save 1% of your income into this thing, what happens? How long will it take you? If you think about those two functions, the time and money function, right? They're usually inverse of each other. So the shorter your time period that you want to make it happen, the more dollars you have to put towards your own system.
Mm-hmm.
The fewer dollars you put in your system, the longer it's going to take.
Yeah.
I think that's just it just makes common sense. So the question is, are you afraid of premium or you're embracing premium? I embrace premium. I know putting money in my system what gives me access to it where I can use it and put it to work.
Yeah. And that said, it doesn't mean if you don't have a ton of money to put in the policy that this is not for you. You can start small. I started very small.
Yeah. But it's a percentage. I think we look at it in what we use, quite frankly, and what we read in all the financial literature is what? 10 to 30% you need to be savings. This
Yeah.
should be your saving strategy to begin with.
Yeah.
Saving strategies into a place that gives you all kinds of guarantees, right? Safety, liquidity, death benefit, privacy, constant compounding, a decent yield, control of those terms. These are the guarantees that you get in your whole life policy. So why wouldn't you want to at least go back to what the financial books are telling us? The richest man in Babylon, we should be saving between 10 and 30%. So just imagine, anybody that's on this, that's listening to this, just imagine if you saved 10 to 30% of all that you earned starting day one of your life, how much money you would have in your system.
Yeah. It boggles the
And then
mind.
it boggles the mind. And then I hear people that are 60, 70 years old, man, it's too late to start. Well, it's never too late to start. But again, it's the legacy. It's like you're trying to grow wealth, which is, in my mind, that legacy of saying the next generation. Start the habit. Show them what it's like. Be the leader. Bring them on board. That's why we have parents earning policies on kids and on grandkids and so on and so forth, because it's part of the family banking system. It doesn't have to be, when I say closed system, it's a closed system for your family, not just your policy, Nicole, or your
Right.
husband's policy or your daughter's policy. It's that whole family policy. And
Yeah.
then as they grow, they'll continue that. All right. Well, thank you so much. Parting shots. Do you have any thoughts that you want to share before we go?
I don't think so. I just, as we were talking about this closed system and the power of a closed system, I think a lot of people overlook that piece of this early on because it does take time and they can't really see the power of that closed system in the early days of their policies.
Yeah, it is. It is. You have to be a bit of a visionary, and not that it's not going to happen. We know it's going to happen. I mean, it's happened for 150, 180 years with these companies that we write with, right? One America was a company that we write with a lot. They've been doing this for 150 years, and it seems to work out exactly the same way every year, right? You put your money in, it follows. It's guaranteed. That's one of the guarantees is that you have an increasing cash value,
Yeah.
guaranteed.
I
Now,
guess one
the
last
non
comment that I would make when you talked about us building this non-traditional home, the vision for this home was there, but when we started this out, it was hard to imagine the house built. just like when you start these policies out, it's hard to imagine having a policy with $700,000. But over time, you see it come together, and it's pretty exciting. Even with these policies, as boring and plain Jane as policies can be, it's pretty exciting to see your money growing inside of them.
Absolutely. It's hugely exciting because, especially when you start putting it to work, that's when you see the excitement start to happen, because you're like, oh my gosh, I'm truly, maybe day one or day three or year three or year five, you're not controlling 100% of that system. You're still having to supplement it with somebody else's system. But it's that transition that has to start to take place. If you don't start the transition to having your own system, if you don't start, it never happens, right?
Right.
That's the whole point. So all I would say is take some action, get educated, completely understand this conversation and the graphics that are on here. I know they're drawn out so nice and pretty, but I'd tell you, reach out to us. We'd love to have this conversation. Nicole, we'll have your contact information. We've had it in all our other podcasts as well, but reach out to us at Sagewell Strategy, because this is the conversation that I get truly excited about. This idea of this family banking idea, this legacy building, that is truly I think is the pathway where if you want to find financial freedom, this is where financial freedom lies. Thank you so much. Talk to you soon. If you're enjoying this podcast or know anyone else that might be interested, please be sure to hit the subscribe button and please leave a review. This will help this podcast reach and help more people by ranking higher in searches, and ultimately help more people get out of financial bondage. And don't be afraid to share this podcast with your friends and family, as we can be easily found on Apple Podcasts and Spotify.